Hi everyone, welcome to the session. One more session on as part of our knowledge series. This is on new umbrella entity NUE. I think until before this NUE, I had never heard of that NPCI was a umbrella entity. I had no clue. And when this word started going, I just was confused. Ki, what exactly are we talking about? But obviously, we have figured this out that NUE is an entity which is basically will be equivalent or similar on par with NPCI, and also is for profit entity, right? So it can actually build networks. It can be on the retail payment side and solve a lot of other issues, right? So today, if I look at it, and this is my personal view, that there are positives and negatives of NUE. Personally, I somehow felt that NUE was not a great idea. We could have created an NUE kind of equivalent entity on the lending side, on maybe wealth side. I think something else, right? Why only focus on payments where already there is enough fight, and there is a need for standardization, which is again going to get marred because one more entity coming in, and innovation is typically against standardization most of the times, right? You keep adding more to it, even within the same organization. If you look at the way NPC has multiple products, they all operate differently. And if we keep adding more and more anyways, I think it will be a confusing thing. But any which way, I think there's the positives also. So we'll talk about in this session about both sides. As usual, we will keep it a bit tight. I think we will try to ensure that we complete it on time, and then we get around 20 odd minutes to sort of discuss the points and all of that, and take your questions as such. So I think that's what the agenda is. I'm just sharing the slide, and then we can start. So again, maybe many of you may not even know me. My name is Sameer Singh Jari, and I'm part of the Digital 15. I have with me Shashank Shekhar as well.
Hello everyone.
Yeah. So like maybe we never introduce ourselves, right? So go ahead and introduce yourself, and then we can start. Yeah.
Yeah, thanks, Amir. Hello everyone. I'm Shashank here, part of the Digital Fifth for last 2 years now. And prior to that, I've been worked with DCB Bank, where I was handling digital banking, IT infra, and also set up the entire open banking framework there. And before working with DCB Bank, I worked with Wipro, L&T Infotech, more into working into the security, compliance, and the infrastructure technology advisory services, and work primarily in the BFSI segment in India and Middle East. And here I'm working more towards the consulting assignments. I'm looking forward to engage with you guys. Thanks.
Thank you, Shashank. And as I believe that I may be one of the oldest guys in or maybe digital finance for I've been working the same thing for around 21 years, and with Citi, with Kotak, everywhere I was heading digital, and few instances, few work in US and Europe as well. Again on the same side, I always thought that I was very sharp and smart on payment side until UPI came. It took me some time to figure out UPI, so I'm no longer as proud of myself as I used to be saying that I am a payment expert. With UPI, obviously, I learned a lot of things, but I'm sort of not the smartest guy on earth to figure out how these kind of new ways work. But yeah, like you guys, we are also learning. The section specifically is on new umbrella entity, which RBI has come up recently. We'll talk about the timelines, we'll talk about the concepts, and we'll also talk about the implications of what we believe will happen once NUE comes in and action starts on that side. Yeah? Uh, let's go on. A quick brief on ourselves. We run this firm called the Digital Fifth. We are India's first fintech and digital consulting firm, and maybe as of now, maybe amongst the largest worldwide. We are 14-member team which run this business. Three co-founders. I think Shrikant is not there, the other co-founder, but we are sharply focused only on fintech domain. We don't do anything else. And some of the areas of work we have worked on is consulting. So we do work with a lot of entities around setting up their processes, plans. We almost always act like a co-founder, and in many programs we have actually even acted like a CEO, run the business and hand it over to the new CEO or new founder who came in. So I think that's the profile of work which we do. We have done a lot of payment initiatives as well. For example, we have set up a payment strategy for a bank as well in India, and few more. We have set up a payment fintech in Middle East. We also done a lot of work I myself have worked on payment systems almost all through these 2 decades, setting up for Kotak, setting up for for Citi, DCB multiple times over. So that's our expertise level. Partnership, obviously, we love to do partnership between fintechs and banks, and that's our NBFCs, and that's very closely knit for us. We promote a lot of new entities in the market, and that's critical. And third is we do a lot of open banking, digital banking. In fact, this session itself is part of our digital payments course, which is coming up on next Saturday, Sunday. So we do a lot of courses, and these are all certification programs which are well valued by the market. And our participants have been, and we would have trained almost 2,800 people in the country, and all of them have gone on. Many of them have gone on to become to found their own companies and maybe change their roles and maybe enrich their own jobs as well. So that's something which is big for us. We'll talk about it, and we are also launching a long-term program, 4 months program, by end of next month, which will talk about fintech, open banking, as well as entrepreneurship. So with this, we move ahead. These are set of customers we have right now, and of course, on a monthly basis, we add at least 1 or 2 labels. So given a team size of ours, I think it's a good number to have, and we hope to progress much faster from here onwards. We work with banks, we work with fintechs, we work with software companies, we work with a lot of people outside India as well. So let's come back to the agenda as such, which is what is happening on the retail payment side. So we'll talk a bit about it, the context on which NUE has come. We'll talk about how RBI guidelines which are there. How do you sort of understand that? And basically, we'll also talk about the impact of that on various tech stakeholders and what we believe is a success criteria as such. So this is largely the context of it. So Shashank, you want to quickly take it, and then I'll take it from there?
Yeah, sure. I'm requesting for remote control. Yeah.
I'll do that. Yeah, give it.
Yeah. Thank you, Samir. Thank you. So as Samir still, I'm also not a payment expert, but we are trying to learn in the payment during this process. And that's this topic come, we thought that why don't we explore into that? So first up, part of this sessions, we'll try to look into the Indian retail digital ecosystem. And the more we were studying it into and figuring out that it's very complex. So talking about in 10 minutes definitely is a kind of a marathon effort. So, but just on the quick background. So if you look at it, in India retail digital payment system, one is primarily coming from the RBI, where that you have the RTGS and NEFT. And both also in the last few months has gone 24/7 kind of the framework for the digital payments, which primarily driven through the RBI infrastructure. While on the main layer that NPCI, when it was introduced, it kept on launching the various platforms, be it IMPS, UPI, AEPS, NACH, BPPS, all these frameworks now driving that majority of the digital payments space in India. And then you have the card services where the debit cards, the credit card, charge cards, or the various prepaid instrument which has come into the industry to facilitate the wallet-based transaction or the prepaid kind of based of the transactions. And the majority of this infrastructure also, if you look at it, rides on the NPCI network of the RuPay. So these are the various instruments which are available. Apart from that, all the other paper-based kind of instrument like check and the DD and all the other piece. Just a minute. Yeah, sorry. And if you look at who are the other players into that, which forms the entire part of this in ecosystem. So definitely that networks primarily to drive that the railroads where the Visa or the RuPay or the MasterCard play that major critical role. And then you have the various products, business models which has evolved around that, be it on the POS side or the MPOS, which facilitate all forms factor of the transactions. Or you will have the payment gateway, again, primarily to drive all your e-commerce based of the transactions or the mobile based commerce transactions. And then you have the wallet, I was talking the prepaid bundle with the wallets, that infrastructure. And then you have lots of technology service provider, which is like FIS and FSS. They form again at the critical component where they provide that entire EFT, electronic fund transfers, switching kind of infrastructure where the bank infrastructure get integrated along with the NFS and the Visa and Master railroads. Yes. I'm finding it. Yeah, sorry. So if you look at it, the digital payment system, we are looking at what are the players are there. If you try to look into the numbers kind of things, that how the entire ecosystem is stacked together and what are the kind of the numbers that if you look at it. So ATM networks, the primarily comes as the NFS in the mind, but while you have the couple of other networks, and this all the data has been picked up from the RBI. Then you have the card payment networks, again on the like around 5 players exist in the Indian ecosystem. Then financial market infrastructure, which facilitate that settlements and services like Clearing Corporation of India or the NPCI, cross-border transfer, and the PPI instruments, and then Bharat Bill payments related entities into that. So if you look at the more than 40 to 45 players, 60 players into the existing, while in this multi-party and the multi-participants kind of the infrastructure, you have the one networks which more from the payment system operator like NPCI exists. And now where the entire the debate of the NUE started coming in, because the kind of the volume, the growth has happened, and the way the NPCI are able to drive this out pretty well, that where that exponential growth that we have seen in both the terms of the volume as well as in the value, that now the value is still has to see in terms of the total transactions still may not be that high, because if you look at the large value ticket, the RTGS primarily takes the bulk of it. While in terms of the volume, almost 64% of the transaction of the digital payments now rides on the NPCI infrastructure. And the total of the 40% of the retail transactions, which also includes your paper-based transactions kind of things. So when you start looking into that 5 years journey, it's almost like volume has increased to the 5 times kind of thing. So, and that's where the debate has started coming up. Yeah. So again, that was the story on the volume side, and the value side. Value also is being exponentially growing, both in terms of because of UPI and all the other transactions that form factors that comes from the NPCI infrastructure. So here that entire story comes again. Why the NUE required? Maybe the certain limitation and the challenges have been experienced, and if you look at it, try to study more into that, you'll try to figure it out that okay, there kind of a concentration risk is appearing into that. I don't know from where this appear. Okay, yeah. So the concentration risk, because earlier we have seen that multi-system, multi-participant bodies, but still you have that one payment infrastructure that coming from the NPCI. So that could be that everything is riding towards that infrastructure. Then also felt that why don't we have the competition for non-banking players also into this market, where that which brings the diversification into the whole of this market. And then as the 64% of the infrastructure riding on that one infrastructure, definitely it's a kind of a single point of the failure. Now definitely RBI has, NPCI definitely has that kind of the infrastructure with the redundancy, but still it's coming at the more from the systematic risk perspective, which RBI has identified under that their stability report, financial stability report of the December 2019, where it has been identified that it could be around systematic risk from the market perspective. So that's where that it has been identified that why not have another umbrella entity. Other side, when you look at the populations, like almost 150 million people are doing the transactions, while at the beneficiary side, you will have the 600 million. Still, it says that the huge potential to expand this market in terms of the outreach, and especially to the metro cities, where that you can reach out and then start bringing that into the digital payments landscape. And then additionally, then you are talking about the various other form factors, various other innovations to come into the play, be it on the offline payments kind of things, where the lots of work is still happening, the cross-border payments, or the capital market, or the other payment areas that can be introduced. So these are some of the challenges that we looked into that. So now let's look at that some of these components of the NUE. So we'll try to define into any NUE. I'm not going to do it into in-depth part of it, but you may be already knowing the certain part in terms of the constitution, how it need to be constituted, who should be owning that, or definitely that kind of experience that it expects that, okay, you need to have the minimum 3 years experience in the running the payment system operator or the payment service provider or the technology service provider, which could be either the Razor Pay kind of the infrastructure who are on the payment service provider, or the TSP, which could be any payment switch provider like FIS, FSS, or the Finacle kind of the entity, those who are providing the payment technology infrastructure. And then how the constitution of the capital should be there, foreign investor, FDI that need to be there. So this is like broad kind of the constitutional structure. Yeah. So I'm just skipping that. That's more on the definition side of it. That's the PSP, PSO that we have been talking about. In terms of the timelines, it has already released last year, and application has already been started accepting. I mean, I think February is the date when the applications is expected to be submitted by all the potential party. We have been hearing about that who is applying and not who is not applying, be it from the Geo side or be it on the Tata or be it on some of the banks that want to apply for the license. And RBI has planned for the 6 months of the evaluation period, and it could potentially give a license to one NU or the multiple that's yet to be seen on that space. And in terms of the services, what is expected that they can play around in the same space where the ATMs infrastructure can be put in place, the white label kind of the point of sale services, or the Aadhaar based infrastructure can be used for the payment services. And also the remittance services that we have been talking about, that which can facilitate more of the cross-border payments. It could be in the new products like offline payments or the micro payments, and also bring it more of the open APIs kind of infrastructure. And definitely they need to play that clearing and settlement central bodies when they are putting in that kind of infrastructures to manage that entire the reconciliation settlement between the banks and non-banks party. That's typically where the NPCI plays that role when it's running its own payment instrument across the banks and the entire ecosystem. As well as you need to manage that entire operational infrastructures, operational risk, be it systematic failure or the system error can lead to into that, or the how do you facilitate the settlement and then work with the banks and the non-bank party to maintain the liquidity risk into the ecosystem. So, and that the critical component also has been emphasized that need to look into that how it's become interoperable with the NPCI infrastructures. So that's also one of the things that has been emphasized, that these entities need to bring it as much as that also possible. So yeah, Samir, from there you can take over the impact part of it.
Thanks, Shashank. So I think we will talk about the implication, and can you just manage the people joining in? I think few people are still
Yeah,
joining.
yeah.
So if you look at it, who are the key stakeholders in the whole ecosystem? Of course, the banks. I think a lot of times people forget that banks are impacted as well. And we'll talk about detail on what's the impact on bank. The new entity obviously is coming in, so it will actually adjust and create some changes in the market. The fintechs will be impacted. The NPCIs obviously will be impacted because they will have a competitor. Right now, they were running alone. And of course, RBI has an impact. Merchants will have impact. Customers will have impact. All kinds of customers will have impact. All kinds of merchants will have impact. Just for example, the lenders will have impact. If you are in insurance business, you are impacted. Everybody will have some impact because you have more options. You have a chance of negotiation, and there's a chance of sort of things falling through. So there are all the kind of risks and possibilities you can think about. So let's talk about the banking system ecosystem. And right now, focusing on the banking side, what the implications are. I think personally, I believe, and I have lived through my life working with a lot of platforms, and be it in the initial days when we were setting up RTGS as part of Kotak Bank or as part of Pinnacle platform, we were integrating with so many platform products or local platforms across the world, or be it DCB where we were implementing IMPS, UPI, Nash. I think all of them came in the one shot. I think the challenge is this, that more is never the merrier. I'm talking right now banking perspective. I'm not talking customer perspective. From bank's perspective, it's more is not merrier. The banks don't get much out of any of these new platforms. Payments generally tend to get controlled and managed by few entities, and largely if you are a small entity, or even if you are a PSU, or you are anybody else. So other than top 4 to 5 banks, I've not seen many banks getting any benefit out of it. In terms of capital, I think capital is hugely invested. I think one platform which comes from the market from any entity, NPCI or RBI or anybody else, they need Oracle license, they need this license and that license, and then you need to be ready for taking capacity. You need to ensure that it's well managed and controlled. A lot of times the mandate is also that it should not be on cloud. Now just imagine kind of size of the transactions we are going to manage is going to be humongous. So therefore, each of these entities, in terms of money which we have to invest in each platform, is anywhere between one or two crores minimum. by each bank. You may be the smallest of the bank, but you may still have to invest a crore. There'll be a software license, because the moment you say, I will have a UPI coming up, UPI platform, you have to invest on your side. You need to ensure that you have servers, you have licenses, you have Oracle licenses, and you also have the replication, because you need to have a DR side. You need to have availability on an immediate basis, and the requirements are immense. I maybe, if I say 1.5 crores or $200,000, I think that may also be less. It may be even higher, and it's on a year to year basis. You will also need people to manage it. You will also need people to engage with the ecosystem. You will also have issues, you have to fix those. And there's, of course, from a cost perspective, is 1.5 to 2 crores minimum you have to invest, and more is also possible. The challenge is that there's no way to recover this money, right? I don't think any bank, which I'm talking about, a smaller entity, has ever recovered much money on these ecosystems. So it's again a big boys play. A few guys will make a lot of money, and rest all will have nothing to do other than debit on their system. So just imagine, if any bank is right now supporting 6 to 7 platforms from NPCI, they must have invested anywhere between 7 to 10 crores, or maybe 20 crores, serving and supporting them, and including every year AMC. The moment you increase it, saying that now there are two more entities which will come in, I think complexities go off. Each of these guys will try to innovate in the initial days, and there'll be a possible mandate also coming from RBI that you have to invest with them and you have to support them. Now, just imagine, on all sides, the pressure will come on banks to support all these changes. On the other side, there'll be also discussion that the rates will be lower and MDR will be lower, and all of that is zero. So if you look at it, it's a very strange environment. One side, complexities is increasing. They were to reconciling with ATM, they were reconciling on POS side, they were reconciling on internet banking side, they were reconciling on maybe a lot of API partners, and now you have one more IMPS, RTGS. I mean, I think the bank will become more reconciliation heavy, and issues, right? I mean, I'm sure many of the bankers have seen the frauds in initial days. When you set any innovation in, it has its own challenges. People don't understand. When you say in-app, I'm telling you that 90% of the bankers will also not understand what in-app transactions are and what are risks attached to it. So complexity will increase, settlement becomes far more complicated. The need for each of these ecosystem will need to have more liquidity requirement. They will not work in a pool. So each one has to be, there has to be given separate amount of pool of money to sort of the settlement risks are taken care of. So you are now losing out on more on money. Security risk will increase, because as many ports you open, as many integrations you do, all of that is impacted. So revenue side negative, but yes, there are chances of good partnership. If you were the first mover, you potentially can engage with the ecosystem and build new models. Yes Bank is classically in the case where UPI, when it came, they ran the fastest and made definitely a big impact in the market. So mota on a very very high side, I think it's a very very negative thing for banking system. No revenue to be earned on top of that, and they have to tons of cost to be attached. And of course, there's a mandate which keep coming from each NUE: do testing, do this certification, do that certification, and stuff like that. So I think negative for banks as such. NPCI, I think my personal view is that NPCI impact will not be very large in the initial stage. I personally believe that they will be like LIC in the insurance business, or they'll be like a Maruti in cars. They'll control the maximum market. They already have invested in the infrastructure. They're already integrated with all the partners, all the entities in the market, and it's very unlikely, very very unlikely, that they will lose the market share at all. By the time these NUEs will come in, it will be another 2 years when they will come into any kind of production. So I'm assuming in August the license will be given. By the time they will come in reality after implementation, they will be, basic infra will be ready in maybe around 6 months or 1 year or whatever, that 1.5 years. So around August of next year, there is some body which will come up, which will be technically ready. But you have to realize each of these entities will have to integrate with all the other partners. So their time for to market will be huge. I think by the time these guys will make any impact, any significant impact, it'll be 3 to 4 years down the line. So we are talking about maybe 2023, 24, or 2024, more of that, 24, 25, when these entities will have make impact. So NPCI is secured for another 3 to 4 years, because others will take time. There's also a sort of support structure where NPCI may come back and saying, I will give my connectivity to all of you. Come work with me. So if you look at the way the networks collaborate, they collaborate with each other even on a telecom side, where they give their own infra to third party and use it. So it is possible that NPCI may support these other ecosystems to also run on the current infrastructure where they have built, the integration they have built with a lot of banks as well. The largely the only risk they carry as of now is the resource risk, right? Because the resourcing will be impacted. I'm sure many of them will look at sort of hiring for NPSI because experience is huge. And they have very well run organizations, so super organization to work with, very customer focused, and skill levels are very high. So I think that's a risk which they carry, which is the resource retention risk, which surely will have. But largely, overall, I don't believe that they will be under deep trouble. They will do very well as such. In fact, now this opens the possibility of NPCI getting into other segments. We always had said that they should be doing more on AIML side, and their data which they have is far more powerful. So there are possibilities of NPCI building a new models. Maybe they'll get into lending business. They will be able to get into anything else because they have the trust and the infrastructure already built. RBI, obviously, the cost of additional entities coming in will act a bit more to the load, while the risk will come down at the industry level. RBI load will definitely increase. The requirements will also change from each of these participants. The interesting part is that most of the guys who will come on NUE side will also be existing player on a payment gateway or a e-commerce side or somewhere else. Now, the point is always a risk of influencing the results, right? So some products may get built, which will influence the market. So I somehow believe that getting some of these large players in the market will make it very unwieldy for RBI to work on it. Again, I'm not a RBI guy, so I won't know exactly how they'll manage, but I somehow believe that getting two large players into it, and which will also have a foreign influence, will make it unwieldy for them to work on. And I think right now they're managing one multiple is a challenge. I'm sure there will be fraud issues and all of those typical issues. But obviously, positive side is very clearly there that the concentration risk will dramatically come down. And I'm sure they will also push for a bit of a standardization in the market as well to support the market. So this is the three entities: banks, NPCI, and RBI. Then it comes to other ecosystem players like a fintech, right? I personally believe that fintechs will have a good opportunity to work with a lot of, so they can build new models. They can now go to NUEs and talk about new models and take their support to build it up as well. So definitely today, my personal view, and this is, please go ahead and quote wherever you want. I believe that Indian payments ecosystem may be way ahead of the market worldwide, but it's still in rudimentary stage. It's still in rudimentary stage. Still, if you, let's say, I want to make a regular collection from your side, so the collection products are not built at all. There's no digital collection product which can allow for varying frequency, varying amount. I still don't know. For example, in my account, there's a credit of X amount. I still can't figure out from where the money is coming in. There is still no homogeneity across products. Somewhere we put mobile number, somewhere we put some other code. It is impossible to figure out. If I have to pay salaries, the structuring is not right. There are no bulk products which are available, which are easy to use. I think we are still not there. There's also a huge need for, there's now a discussion around embedded finance, right? But there are no products for embedded payments. For example, if I have to buy a mutual fund, can I have embedded transaction built in? Rather than two authentication, can I do in one shot? These are all running on the India's infrastructure. Can be assured that between MF utility and maybe NPCI, there is a collaboration. There's a collaboration between, bureau and NUE, and they build a new product. So I think there are possibilities which will come in, and fintechs for sure will take that advantage and build whatever they are going to build. So there's positive thing for them. They also will be sort of be able to partner with some of these players as well on a long-term basis. And of course, I believe that a bit more investment will happen. Finally, if you look at PhonePe came because UPI built a new bridge, and on which they came on board and built maybe one of the most respectable companies in the country, one of the best unicorns in the country, because they ran on the railroads of UPI. Similarly, other platforms will also produce new unicorns as well, and generally they'll be supportive of the market. I think lenders today don't have a great collection product. We are trying to use BVPS for it, but it's not built for purpose. So I think that is something which I'm really looking at. For merchants, I think merchants have always had to face a huge amount of MDR all the time. It's funny. It's really funny. where let's say if you go ahead and when we run these trainings and we run on these platforms, when we do these trainings, these trainings cost somewhere close to 21,000 for a weekend. 2 days close, including GST, costs something like 21,000 rupees. And if you add on top of that, because of the platform on which it is there, and then they charge some charges, whatever it is, finally we get 2.5% less. Now, for anybody else, it may look like a small change. I believe from my side, it is a loss of 700 rupees per month per participant. It's a waste of money, right? If they were to do an EFT transaction to me, it would have been zero cost. So the point that I'm saying is, as a merchant, we will be very happy because we'll have lower cost to manage. I think today there is so much of MDR which is already built in on even on debit card kind of products. I think this will come down. So, but merchants will also have to face a lot of reconciliation issues. Today they work with one product, second product, third product, more products, more QR codes, more complication, more integration. I think there'll be a lot of menace out there. A lot of people will not even know what to do. So the training need and all of that will dramatically go up as such. So merchants will have confusion, but still they'll be happier off because they have more options to work. Again, customers will also have confusion, but generically they will have better experience. They never had to pay for payments generically. I'm talking about the payer and pay. So merchant always had to pay for every money. P2P were always cheap. So I think they will have more options, more frequency, more levels of payment, but and maybe there will be more embedded kind of payments as well. So customer will at the end forget. I think my personal belief is after 3 to 5 years, customers will actually forget that they are making payments. They're always trying to buy mutual fund. The payment will happen. Today, when you have this experience for a Uber is built, it is built separately. The two ecosystems are coming together. But let's say on basic infrastructure of the country, which is mutual fund or stocks or whatever, if we can ensure that as part of one journey, let's say if you have a UPI equivalent transaction and you just put a mutual fund detail, automatically something else happens, right? And automatically one transaction, two transactions happen. Instead of buying first and then paying, it is buying and then that's it. That's about it. So I think that's where we will go. So customers will definitely have a better experience to work with. And maybe hopefully they will also know from where the payments also come. Today, I can't figure out from where the NEFT RTGs come to my account. Not that I'm rich, but it's difficult to figure out. Now, coming to NUE, whatever they take to build a NUE, one thing is very sure, it is going to be an uphill task. It's absolutely going to be uphill task because if you just look at, and I'll give you one very simple example. If you look at if you look at account aggregator, so account aggregators are now it is coming under SAMATI structure. Account aggregators were given license, I think, around 4 years back, approximately 4 years back, maybe more than 4 years. I think 2016 November, somewhere around that. But they are still not properly live. And NUE will face the same problem as account aggregators have got it. Account aggregators has this problem that why should banks connect to them? It costs them a lot of money, and there's no benefit directly accruing to them. Same issue will come when NUEs will start going, and every day a new NUE will open the door. Every day will come with a new door and new product. What is the incentive for any bank to come on board? And therefore, they will see huge time to sort of take the task on board. I personally believe that while 500 crores is the capital required, I believe that what it will take to build this NUE right now in the current environment, maybe I'm talking about a real use case to be built anywhere between $500 million to $1 billion. I'm not, I may be looking exaggerating. I'm not that sharp and smart, but given that competition which is there and given the need for scale fast, I'm not talking about NPCI was built over 10 years. I think anybody who's getting NUE will expect results to come in next 3 to 5 years. Now, at 3 years down the line, they'll be actually live. For getting them live, they'll have to invest in a lot of market making and be very expensive. That's my take on the process. Don't judge me if the money looks too high, but I think it's not going to be easy at all. It's very tough job to go into market and replace somebody who is occupying the market as such. So they have to invest a lot on infrastructure. And you have to remember, NPCI infra is not very dated. They have got it very correct. So I think that's competition which is really big. And what will they build, right? I personally believe that they should try to build something not for collections, but for payments. For not for payments, but for collections. I think collection as a need is never understood in the market. We are always trying to say that somebody will initiate a transaction. There is no need for people to initiate transaction 90% of the time. There is always a need for somebody to ask for money as against the barter system, right? I give you service and you pay me. As it's always part of the invoice, it is part of the transaction. So can we ensure that as part of the framework, the collections is embedded? For example, if I send you an invoice and you just click on the invoice, the payment is done and account is debited, rather than you go to a separate place, do a payment, and then I get the payment, and you reconcile on your side, going crazy, and I go crazy reconciling, and then we realize that, oh, this payment system cannot be used for taxation. For example, there's no product other than the regular payment structure which is already available. You can't do a tax payment on a UPI. You can't do all of these. So that structure has to come in. Can it be used for newer use cases? As of now, offline payments are not possible. That's something which surely should work. When I say offline payment, can we have device to device money movement? For example, if there are two mobiles, they are talking to each other and money is transferred, and when they are in the network, for example, you near two villages, you transfer through this, and then we go to the normal network, the money transmitted and debit credit happens. So those kind of technologies will definitely come in. I'm sure blockchain has been heard about a lot of time. Maybe some use cases will come around that, but innovation is definitely a very early stage right now. Whatever we see right now as a UPI, I think I remember working and as on the most on the bank side, the product was built around 2015 and 16. And today we are 4 5 years down the line. There's a bit of upgrade, but I think to be honest about it, if a very old person is trying to use UPI, it's not easy. So there's need for newer and newer products which are simple to use and as less touch as possible. Today there are a lot of touch points, right? When you do transaction on let's say website, a thing goes to your mobile. On mobile, you have to open the link, put the pin in, transaction will go forward, and then go and check. I think while it looks like seamless, it is not seamless. It may seem to be seamless for people like you and me, but it's very irritating sometimes, right? So I think there's a lot to be done there. So innovation has to be done much more. Revenue models will be different. I think with MDR going down and down, I think they have to find newer models to sort of operate on, and maybe they will do embedded lending as such. I don't know what they will go in, but yeah, they have to figure out new ways. Interoperability, I think they have to figure out how to be interoperable. Now UPI works in one particular way, IMPs work in one particular way. How will you engage? Will you create an equivalent of that on your side, or you will pass on through? I think it looks very weird to me. But they have to find a way to do it at the way you had telecom. Similarly, you have to find operability, standardization. So standardization while innovating, I don't know how it will work, but hope to have something coming up. Technology will be heavily used. So anybody who's in technology business should be happy. I think the country will see a fairly large amount of investment in technology infra, and that will add to the market. If even if NUEs don't make money, software companies and hardware companies will make a lot of money out of it, and with the cloud guys as well. And of course, there's the opportunity to develop differentiated product. I think these guys will do a better job at behavioral stuff, so that, for example, security processes are still OTP based. Can they be different? So behavior based on behavior, I do believe there will be a different ways of doing it, different processes, different product offers will also change, which are at times I believe still static. Architecture is obviously, I mean, I'm just trying to draw it. It's not a perfect one, but this is how typically it looks like right now. Each bank will have a UPI platform or IMPS switch. You will have a CBS platform, and then you talk to NPSCI switch, and NPCI switch talks to the other side. And then of course there's a phone pay here. There's another entity somewhere. There's a four-party model and all of that. So this is how a UPI or IMPS or APS works. And if I were to look at it, you will add one more layer and then one more layer. This logically becomes far more complicated for anybody to operate in as such. So I think banks will have to sort of set up this side of it. I know it is not easy. I still remember that night when UPI had to go live, and I mean that is one of those nights where I was in office testing and checking and coordinating with NPCI, and I can tell you that it was a long journey for us to build it up. So with NUE coming in. I remember those days where we were going live with the MPS, tough nights, RTGS, tough nights. I think whatever journey I've seen on the site, it takes a lot of effort and senior management to run these processes. So be aware of it. It's not going to be a cakewalk for the banks to do it. I think interoperability between these two entities, I think we need to see how it comes up. It will be a bone of contention. What will be the success factor for it? I think there has to be a standardization approach. As much as RBI pushes for standardization, it will help in the banks in sort of simplifying their life. Cybersecurity again is a big success factor. I do believe that in last few months, I mean, many of these startups have gone through a lot of data losses as well, and larger entities also. I think we need to be aware that networks should not be and should never be under attack. And if they're under attack, there will be huge loss. So I think I believe the cybersecurity will be big. Interoperability between these two entities will be critical to make it happen. Innovation for sure, and of course, at the end of the day, you like it or not, there has to be a monetization model attached to it. Otherwise, money burned never comes back, right? So these are the points which I want to talk about. We know for sure that at this point of time, Tata Capital with TCS is doing it and applying it. Infibeam plus Soham. Soham is again and they are the first one to announce that they are entering this business. And then we also know that HDFC, SBI, and Bank of Baroda, all of them are big shareholders in NPC as well, also attempting it. Reliance here is attempting, and then other foreign entities like a Google or a MasterCard and Amazon and Facebook and Visa. And I can't tell you that, but I have been talking to a lot of banks as well, and a lot of those who are not in this page. So they've been taking talk to me, and we've been trying to tell them what exactly to do. So there's a bit of work which is still going on, but the list is huge. A lot of banks are also attempting it out, saying that maybe there is a value out there and can we create something new. It will be very awkward for an entity to run two sites. So imagine XYZ bank launches their own NUE and tries to integrate with other all other banks. It will be a bit tricky stuff. It may look all easy, saying that yeah, we'll keep distance between two entities, but the way you had a regulation issue that a corporate cannot launch a bank, similarly these issues will also come in. Corporate governance, I do believe, will become a big contention here. I think I think we can keep talking about it. Maybe most of it we already spoken about in one way or other. Of course, a new platform, new products will get pushed on. I'm sure nobody will be allowed to do a Xerox copy of what already exists. So therefore, IP will still be maintained. Digitization is continuously increasing. RBI has been supporting digitization as well. So I think there'll be a lot of sort of trailblazing stuff will happen out there. I think data will be used for monetization as well. How and why and how this entity will step away from data privacy is also critical. And of course, based on the NUE structure, how they will be able to capitalize on it. What the increase in bandwidth is continuously happening with 5G and all of that coming in. Will that be useful and stuff like that? So we can keep going on. I will not bore you with more information. I think generally because we have worked very deeply on the banking side, so including the fact that we have done payment strategy for entities, we have run a lot of roadmaps, digital roadmaps for a lot of entities. We run a lot of outreach program for also a lot of entities, including the current NUE as well for fintech outreach and all of that. And of course, we work a lot on the security privacy. So that's our expertise as the digital fifth. Of course, on the banking, on startup side, we work very deeply on their go-to-market, getting them set up. We've done a lot of strategy almost like CXO founder. We've run that, and of course, we're working with a lot of platforms also, API platform also for their monetization strategy and market connect and stuff like that. So that's largely we've been working on as such. I think this is something which is coming up, which is 23rd and 24th next Saturday, Sunday. We will have, so in fact, this session today is part of our mainline session, and we were talking through, as we said, why don't we take it out and take it to larger larger marketplace? Because I think in the class we will have a different set of customers who will join in, but it will be good if you could take it to the market. So that's why we took it out. And what you're seeing today is part of our actually full-fledged 2-day course. And these are courses which are like very, very long, almost 24, 25 hours you spend over a weekend with us. And they have been very well appreciated. So that's what, and this is the first time we are doing a digital payment course because demand is increasing a lot. And I certainly feel that possibilities are huge. So we'll talk about Indian payment system and all the payment system and payment as service. This is the new stuff which has happened. Cards, for example, are newly used differently. We are going to talk about it. We will also have NASH, eNASH, basics of it, regulatory framework, new innovations, not just in India, but worldwide. So we'll be bringing those on board. We will also talk about the risk management of it. How do you settle out, do settlement and stuff like that. So I think just 2 days deep on payments is what we want to do. And we'll be very happy if some of you intend to join these sessions. Uh, just to give you a next steps, we will have on 28th, we'll have a session on knowledge series on purely on how NBFCs and MFIs can go digital. So this is again for some entities which have not built it. So again, knowledge session, not commercial activities, but of course we will do 13, 14. We'll do digital lending. We'll talk a bit about our executive course as well, and then we'll have a course coming up end of next month, which is on certification in fintech and digital transformation, followed by open mic. So these are the courses which we do, and we have trained maybe 2,800 or 2,900 people in India till now. This is our larger training which we do. I think this is where we a lot of focus is going right now. We are amongst, as I said, is the largest in the market on the training side worldwide potentially, and we will be talking these 4 months course. And if you're interested, please share. So Sonali, can you share the link to the market to everyone for feedback?
It's in the chat, sir. I'll
Yeah.
share it again.
Yeah, please. So we are sharing our feedback form to you. If you have any feedback, for anybody who fills the form, we will share you this deck as well, because you should know what is happening there. So anybody who fills our deck, our feedback form, will get this deck back as part of the response messages between today and tomorrow. So in the course itself, we'll go in deep into fintech, open banking, very deep. Technology side, I think we will take it to a level where required. You should know what blockchain works. You should know how emerging technologies work, AML works. But will not take you into coding side, but trying to take it to business. We'll talk about digital lending course, very deep, almost around 15 to 20 hours. We'll take on digital lending, digital banking more from the bank side, how to build strategy, how to build processes, how do you do digital maturity model for that. Cybersecurity again critical for us, for everyone to build it. And of course, we will also help you in setting up a startup as well. So how do you go about doing it? What the process are required, how the fundraising is done. So this is a package we want to bring on board so that anybody who want to start, I think in 4 months, you should be able to get to a next level very quickly. It's also built for professionals as well, because in many cases in your current roles and responsibilities, there's a need for you to sort of refine, retune and all of that. So important that you also have a look at it. So at this point of time, I'll